Welcome back everyone to the Money Control live stream. You are watching Markets with Santo and CJ. Well, the market is holding on very steadily to the morning gains, the run-up we saw on the benchmark indices and in the mid-cap and the small-cap space has sustained itself throughout the entire trading session, despite a little bit of weakness emerging from global markets, with the US stock futures indicating a sort of a weak start for the market.
Well, yeah, that's pretty much been the trend over the last few days. Clearly, no convictions. That's clearly been missing. You've been seeing the odd technical rebounds, but otherwise, that conviction has always been missing.
Well, Santo, bulls are in control of Dalal Street at this moment.
They think they are in control. Well,
yeah, they are very well, and ahead of the crucial expiry of the April derivative series. And it seems that, I mean, if you look at the broadness of the gains that we are seeing today, it seems that risk appetite has clearly revived a little bit, given the fact that a lot of the beaten down names are the ones that are leading this charge on D Street.
Well, CJ, I would look at it this way. Maybe there's some bit of averaging of wrong trades being done at this point, which is why you're seeing the renewed interest at lower levels. But it also seems a pretty much a fair thing to do, given that market has been in a range at this point in time. So no harm really done there.
Oh, so you're suggesting that everybody is just buying wherever the dip is?
That's been pretty much the strategy. I mean, it's very evident, looking at the market trend.
That is true. In one sense, that is true, but in a sense, it feels like this move may continue even tomorrow, given that tomorrow is crucially Wednesday, and we tend to see a bit more, covering of positions on the market ahead of the Thursday expiry.
The other thing is that you're not seeing very sustained buying at higher levels. The FI selling has been pretty much at the same level, and also retail, whatever money coming through mutual funds and SIPs, that has also remained pretty much steady. So unless the big buying comes in at higher levels, you won't really see the market breakout. I mean, the downside may be cushioned, but you're not going to see the big upsides that you saw last year.
I guess slow and steady is the mantra in this market then.
Yeah.
That said, we saw a lot of action on stock specific level as well. Starting off with Adani Enterprises. What a day today for the stock. It was up about 4.5 to 5% at one point in the session. Largely after Bloomberg, reported that Adani Group has made a bid to acquire Wholesome India's cement business, Ambuja Cement and ACC as well. We know news came out last week that Wholesome is looking to exit a lot of its non-core assets, which also includes the India cement business. And now it seems Adani Group wants a pie, a share of that pie. And this acquisition, it is possible that, according to Bloomberg, it is possible that they may sign an agreement to culminate this acquisition in the coming few days. And to me, it looks like Adani Group is trying to add and further, strengthen its hold on the infrastructure space in the country. We already know it is big on ports. We already know it is big on renewable energy. We already know it is going big on airports and probably now cements.
The cements with that, just a couple of days back, I thought I heard you say that, there's also JSW Steel which is interested in this cement.
It seems like JSW was the other party.
There are multiple bidders at this point in time. So it's still not a given that Adani Enterprise, even assuming that it's going to bid for this, might eventually emerge the winner. So it's a lot of, I think, buy on rumor trend which is going on right now.
Yeah.
Which I would say that in this kind of a market can certainly be avoided.
Well, we will only know when the disclosure is out. That said, Santo, what do you have?
Next stock, Bajaj Auto. The stock was among the key gainers in today's market, up close to about 4%. Now, according to Money Control Pro, overall demand for two-wheelers has been quite weak. And here, Bajaj Auto is in a slightly more difficult position because the shortage of semiconductor chips hurts companies like Bajaj Auto more because, it is into the premium segment.
Right.
The other point is that rising input costs are squeezing the margin of all auto companies in general. Two-wheelers are no exception. But the biggest negative is that rural demand has been hit in a big way, which is a major market for two-wheelers in general, again Bajaj Auto. So, unless you see some kind of a recovery there, and given the fact that fuel prices are high and also input costs are quite high, unless two-wheeler companies are able to pass on their costs without hurting demand, I think it's a very difficult situation for them.
Santo, you're giving me yesterday's news. The reason why Bajaj Auto has been rising for the past 2 days, yesterday also, remember, it was one of the leaders in the Nifty pack, and today as well is one of the leaders in the Nifty pack. pack, and the reason is that there is a valuation comfort that has emerged, and secondly, the outlook is steadily changing. There is now hope. This demand slowdown that you talked about in rural India has been there for the past 6-7 months. Now the hope is that with agricultural product prices going up, a normal monsoon beckoning later this year, it is very much likely that in the second half of this year, we may see a revival in rural demands, rural and as well as urban demand. So that bodes well for Bajaj Auto. Secondly, if you look at it, crude oil prices are down 25 to 30% from their record highs, from not the record highs but the highs that they touched after Russia's invasion of Ukraine. From $140 per barrel, it has come down to almost 95 to 100.
I know where you're
barrel.
going, CJ, but just tell me how much is petrol prices reduced by during the same period?
Yeah, it has not reduced that much, but there is at least hope now that the oil marketing companies will come out and probably reduce prices. We can always hope for that. But the larger point being that there is probably some comfort emerging on the cost of ownership side. Over the past 4 years, the entire argument about the slack in demand in automobile space at large and two-wheelers in particular has been that the cost of ownership has gone up because of motor insurance premium going up, the new BS6 vehicle laws that came out, they have all increased costs. But probably the market is now at least getting used to those changes, and with some bit of cushion coming in from the crude oil prices, it is possible that demand scenario may improve going ahead. Maybe it may not happen tomorrow, it may not happen day after tomorrow, but maybe 6 to 7 months down the line.
Well, there's still to get past the recent highs, and we'll come to it, when it breaks
Those
past
highs will be taken out, my friend, one day.
SBI, again, a stock which has done well in today's market. Now with SBI, the biggest argument in favor of the stock is that at one time book, it is among the cheapest banking stock for a bank of its heft.
So but wasn't it you who used to say if a stock is cheap, maybe there's a good reason why it's cheap?
Of course, there are reasons, but here clearly there's valuation comforts, which is again, one of the terms that you frequently use. Also, the bank has cleaned up much of its bad loans, and because of that, the return ratios have improved significantly, and this trend is likely to continue in the quarters ahead. And lastly, the number of subsidiaries that SBI has, there's tremendous value in them, and not all of it has been unlocked so far. Some of them have been of course listed, but there are still many others waiting in the wings. So when you put all these factors together, SBI does make for a compelling buy in this market.
Compelling buy perhaps, but there are some headwinds in the near term. The rise in bond yields specifically. See, analyst point of view was that as long as yields remain below 6.9%, that is the yield on the 10-year benchmark bond, remains below 6.9, SBI will not be hurting as much as maybe some of the other PSU peers. But now with that threshold taken out, yield is currently above 7% on the 10-year benchmark. The risk of higher losses on the treasury income of SBI has gone up manifold. So it is very likely that in the June quarter we will see a dent in SBI number from this issue. Secondly, although overall loan growth of the lender was about 8 to 9% in the previous quarter, as in the last 9 months, April to December of this previous fiscal year, it has not been as great as some of the other private lender has been doing. While retail portfolio grew about 14 to 15%, if you look at the corporate loan growth, which was the main reason why SBI was being driven up higher by the market with the argument that private capex cycle will come back and corporate loan book will again be in its glory days of 2003 to 2008. That is not showing signs as so far. I mean, corporate loan book has not been growing at all at the pace that retail.
It's been holding fairly well, CJ.
Yeah, but the loan growth is still lagging behind peers, and what SBI needs to do now is to show that it can grow faster than some of its private peers, because even with all the chaos around HDFC Bank, it is still managing to grow its loan book at 15 to 18%. So that goes to show the challenge that remains in front of SBI.
The PSU versus private bank comparison at some levels is also not, it's not apples versus apples, you're not comparing two things, but more of that later.
Anyway, moving on, Hindustan Zinc. Well, we touched upon the stock not so long ago on this show, and at that point of time, I had argued that zinc prices will not sustain the highs that they are seeing right now. And well, what do you know? Hindustan Zinc has come out with a price cut earlier today, and that has led to a decline in the stock, naturally. Now, see, the argument is that overall internationally also zinc prices have been falling low, have been trending lower, largely because now there is a growth scare in China with lockdowns across Shanghai, Beijing. There is a big concern that China, which is the biggest commodity, consumer in the world, will now see a demand slowdown, and therefore metal prices across the board. We have mentioned in the morning also how copper futures, other futures were falling, and zinc is just following suit in that sense. Lastly, if you look at Credit Suisse opinion, Credit Suisse does not expect, even though the management may have indicated that prices could remain firmer going ahead, Credit Suisse does not expect the zinc market to remain as buoyant as it has been over the past 1 year. They expect prices to trend lower through the rest of the year and end 2020 lower than where it was in 2021. And that does not bode well for Hindustan.
Well, counter arguments. One is that we still don't have a clear fix on where commodity prices in general are headed. You're seeing some periodic fluctuations, point taken, but supply chain disruptions will still mean that prices will still be higher than what they were during the over the last year. That's one. Secondly, valuations still offer comfort as far as Hindustan Zinc is concerned. It's got fairly good amount of cash on its book, and there's hope of better dividend payout, which in turn is driving interest in the stock.
So
and lastly,
yeah, please continue.
And lastly, we have that in general capex will lead to higher volume output in FY24 if not FY23.
I was just going to say we have come back to just counting dividends, right? No capital appreciation anymore. Just count your dividends. Is that what it is all about?
Finally, it boils down to that.
Anyway, last stock on my list was is Adani Power. Well, another Adani Group stock. I mean, Adani Group stocks are totally in a parallel universe, not reflecting at all with what is happening in the broader market. And Adani Power was also up by 4 to 5% in the session today. The trigger being that Edelweiss Securities came out with a report suggesting that the stock could be up for inclusion in the MSCI indices. MSCI generally is an index aggregator which reviews which stock to include or which stock to exclude from its index every quarter on a quarterly basis. And what is the benefit of being included? Well, if you're included in MSCI indices, what generally happens is that a lot of the exchange traded funds and a lot of the mutual funds globally who try to mirror or mimic the MSCI indices, they will generally, you will see a lot of fund flows coming from those sort of funds. And now Edelweiss is expecting that the Adani Power could get inflows to the tune of $150 million if it does get included. Apart from that, of course, the fundamental story is also quite strong for Adani Power. The stock has rallied about 186% so far in just 4 months, and that is largely because power demand is surging across the country. We know where the power situation is, and it seems that it's beneficial for power companies at this point of time, and it's reflecting in the stock price.
Well, it still is one of the most expensive stock, and as you said, it belongs in a different universe altogether, where the fundamental rules don't really seem to apply. So
rules don't
that
seem
partly
to apply. Wow.
explains the 186%
You're totally undercutting my argument. Wow.
Okay. Secondly, power demand is pretty strong, no doubt about that.
Yeah.
However, at the same time, you also have to understand the fact that coal prices have been going up. That's a key input for power generating companies, and as long as coal prices remain high, profit margins will always be under pressure. Lastly, the chatter on the street is that the company has not been really holding any analyst meets. So that's very little is known. There's no communication from the side of the company for a stock that has done so well over the last year.
Analyst meets or no analyst meets, the stock is going to the moon. So I think at the end of the day,
a different
that is
universe.
What investors
and lastly,
care
while the
about.
company has turned corner, that's no doubt a good thing. Still, it continues to incur losses at its in its Mundra project, and that is something that market will be looking forward to a speedy resolution, although it's been compensated by the government to some extent, but to be able to justify this kind of jump in stock price, the earnings need to be much more stronger.
Perhaps they will be. Yes. Anyway, that said, we should take a status check on the market. It's almost 15 minutes left to go for the session's end, and the picture is looking amazing on the street. The Sensex is up about 1.4%, Nifty is up about 1.5%. So we have seen a building of the gains, before we came live on the show. Nifty Bank 0.9% higher. Nifty Mid Cap is doing matching the large cap, about 1.7% higher at this point of time, Santo.
So this was pretty much the short covering that you were mentioning, and we are seeing it again. We'll have to look at whether these trends sustain over the next two trading sessions.
Yeah, I mean, look at the stocks that are currently buzzing. Bombay Burma is up about 8.5%. Cholamandalam Investment is up about 6.7%. Apollo Tires, a lot of NBFCs are doing well. Indiabulls Housing, Shriram Transport
But the
Finance.
whole point is, the reason for skepticism is that we have seen rallies like this repeatedly over the last 3 or 4 weeks without the market never really going anywhere. So if you are a trader, then probably this is just the right market. At every 4 or 5% dip, just get in, buy it, and sell 4 to 5% higher.
I think Santo is also probably time. We are in that stage of this bull market where it's time for stock pickers to dominate instead of you just blindly putting a finger on a stock and that stock doubling the way it was in 2020 and 2021. Probably you will not have that sort of a market now any longer, but the market that you are going to have is where active investment management actually outperforms and creates alpha in this market. And that is probably another argument why maybe passive funds may not do that great in this year or maybe the next year, and probably more active funds will do better in that sense.
It remains to be seen.
Yeah, that said, have I missed something?
Well, CJ, we've always been talking about the talent crunch in the IT industry, but now it seems the auto sector is also going through a severe talent crunch, and one of the main reasons for it is the sudden rush by most companies towards adoption of electric vehicles. That is where the talent crunch is coming, and so strong is the demand that at junior levels, according to report in the Economic Times today, you're seeing a almost 100% jump in pay packages, and even at senior levels, they're getting about 50% higher.
Santo, are we in the wrong industry by any chance?
No, you see, every profession has a day in the sun, and now it belongs to the humble automobile engineer. So the demand is strong across all disciplines. So it goes for those who have been trained at industrial training institutes, diploma holders, engineering graduates, MBAs, and designers and scientific researchers. So you're seeing strong demand across all.
And it's natural given the the sort of attention and of course recently a lot of bad press, but overall the sort of bullishness that the electric vehicle space has seen with number of startups coming out, even the traditional companies, legacy companies also getting into that space. Well, EV is, if not the future, if not the present, then it is the future, right, at this point of time. And as you and I were discussing off air, that we will sooner or later reach that critical point where EV demand will overtake internal combustion engine demand, and probably what this shows is that companies are going whole hog on the EV space, and it is something for the legacy automakers to watch out for.
That said, CJ, what are you tracking? What is on the horizon?
Well, earnings again will continue to dominate. There is not much economic data that is expected either today, later in the evening, or tomorrow. But in terms of earnings, we have some big ones. HUL, Hindustan Unilever, is going to come out with its Q4 numbers. Bajaj Auto again is going to come out with its Q4 earnings, and both the numbers will be pretty critical to understand where the overall scenario is in the FMCG space as well as on Bajaj Auto. And more importantly, the commentary from these two companies on the demand scenario in their respective industries is, I think, what will drive the stock performance going ahead more than the numbers themselves. Apart from that, in the second rung stocks, we have Indian Hotels coming out with this number and HDFC AMC. Now, AMC stocks have been down and out. They have not really been performing that well in the market as compared to when you compare probably their nearest rival will be stockbrokers. Probably stockbrokers have been booming in this market, but AMC stocks have not performed. And what needs to be seen also, these earnings come in the context of the big merger between HDFC Bank and HDFC, and investors probably would like some clarity on what happens, where does the fate of HDFC AMC lie in all of that. Indian Hotels, of course, will provide cues onto how their hotel industry is going to do, and blockbuster earnings are expected. A blowout quarter of earnings is expected, and that could provide more tailwind to the entire hotel space.
Well, with that, it's time to let you get back to your trading terminals. Thank you for watching this episode of Markets with Santo and CJ, and do share your feedback in the comment section below.
And we will catch you live tomorrow morning at 9 a.m. Also follow us on the social media links at the bottom of your screen. Have a great trade, whatever left, 10 minutes left of the trading session, and thank you so much.